All right, everyone, welcome back for another episode of Carnivore Trade. State is Friday, October 21st, 2022. Obviously, different little setup today. We've got a very special guest in here, over 175,000 YouTube subscribers. You probably heard of him. I think over 55,000 on Twitter now. It's ChartManDan from the Chart Guys. Dan, thanks for coming on. How are you doing today?
Absolutely. Thanks for having me. Doing great.
Awesome, awesome. So, yeah, obviously, this is a first interview that I'm doing on the page. Normally, I just do technical analysis, charting, all that good stuff. But yeah, just want to get started here with kind of a trader series and interview some good traders. And what a great place to start here with you being the first one. So just kind of want to first ask about your trading backstory. Recently, you did a Twitter space on that. How did you get into trading? How did you start? What are the things that you've learned, so on and so forth, things of that
Yeah,
nature.
sure. So I've been trading at this point for about 12 years, started back in 2010. And it was really, I put some money in some mutual funds back just out of high school, my high school money that I saved up, and watched it go from $5,000 to $3,000 during the 2008 collapse. And that's when I was not paying attention to markets. Just all right, you put your money in your markets, and then decades later, you look to retire. And that's the game plan that I was going for. And so then I'm looking and saying, okay, I'm down 40% and I haven't done a thing. If I'm going to lose money, I want to be the one to be losing the money.
Right.
So
Right.
so I started, playing around in markets, and really what it was is I got interested in cannabis. I read Jack Herer, Emperor Wears No Clothes book, and it, like, wow, CBD is going to be a thing, and industrial hemp is going to be a thing, and recognizing the shift. California was having its first vote on legalization, which failed, but I could see that the ball was rolling for a clear sentiment shift in across the country. And so I knew there was going to be opportunity with cannabis and with hemp. And so the question was, how can I capitalize on that? And so I was in college at the time and a business management major. So I was being exposed to, the business world a bit, but started going down the rabbit hole of cannabis stocks. There were only a few of them and they were penny stocks, but played around in those and had some early success because there was that momentum into, California's first vote and things like that. And at this point, I was not doing technical analysis. It was all fundamental stuff. And, I was reading some balance sheets and trying to understand the game that way. And it really wasn't until maybe my third year of being in the markets where it was like, okay, I watched some people who are using technical analysis. They're right more than everybody else. And so I want to learn how to do that because they're showing me that they have a more firm grasp than everybody else. So next 3 years or after 3 years being in, since then, just full on technical analysis, learning as much as I can, asking questions of people that have been doing this longer than me, YouTube articles. I personally prefer online rather than reading books. That's where I've been finding all of my knowledge over the years. And then just a ton of trial and error of learning all the mistakes, of learning that I have to put a stop loss on trades to limit my risk, and just starting this journey that consumed my life. I mean, over the last 8 years, I have not put nearly as much time into anything in the world as I have technical analysis. And fortunately, it's paid off, but it's one of my passions in life at this point.
Yeah, and I think we can all kind of resonate with that. I mean, I started, I'm millennial. I came of age right around the GFC, global financial crisis, and that's when I got interested in economics. And I was, like, I want to be in control of this. I don't want, I want to be a victim of the government or the Fed making all these mistakes, and that's how I got into that. And like you said, technical analysis kind of like was my like gateway. I like the macro stuff. I still like macro, but a lot of it, unless you're really, really good, there's guesswork. There's things, how many times we see, um, Snapchat beats earning per share yesterday, but they miss a little bit on revenue and stock down 20, 30%, so the charts. And this is kind of what I, definitely love about your style. And if you guys don't know, follow Dan because he does this very well. It's like keep it simple, stupid, right? Like very, oftentimes when I see you're doing a video, it's okay, there's this big green bar, right? We took out a resistance, but did we make a higher high? No. Did we get above the 50 MA? No. Did we change a trend? No. Then is it really that and these other, amateurs will look at that, oh, but it's ripping higher. You gotta look at it, just dumb out, take all the noise out of it. This week, this morning, the BOJ, the BOE, the Fed's going to pivot, the Fed's going to pause. And I'm just looking at the charts, okay, do we change trend? No. Did we do this? No, so that's it. The technical analysis really just cuts the noise out of everything. And it just gives you those high percentage setups. And it takes a while to master, but it's really worth it in the long run.
It can help us eliminate our personal bias, where it's like, okay, I can
Yeah.
have a bias on the direction I think we're headed, but I have
Right.
a checklist. I have to see this happen, and I'm constantly looking. What newer traders will do is they'll develop a bias, and then they'll only be looking at things that confirm their bias. Whereas if I've got a bias, I'm constantly looking for things to disprove it. Like I want to know
Yeah.
what the red flags of that
Yeah.
bias are. And as you mentioned, with earnings and fundamentals, people will ask me, what do I think about this heading into earnings, or am I going to trade it? I personally don't trade earnings because for me it's a
Never.
gamble. It's a coin flip.
Never.
And
Yep.
my answer to people is, if you're putting in dozens of hours of this fundamental research, maybe you can get an edge. But don't kid yourself if you're not doing that, because you're just guessing and gambling. And I learned long ago that if I want sustained results that can be consistent, that's not the way to do it.
And not only that, but how many times, I mean, I can't countless times, I'll enter a stock or a commodity or something at a certain level. And, my members will be like, well, what are we getting into this? And why are we getting into this here? And I'm like, that's just the chart just says so. And then a day or two later, some news comes out like, oh, this company is doing a buyback. And then the stuff, how many times do you see the charts actually predict the news? It's actually amazing. It happens all the time.
Definitely. And there's people that know the news before it comes out. And so sometimes you can see their activity.
You see it in the chart. Yep. You see it in the chart all the time. Yeah, definitely. Yeah. Technical analysis is definitely, it's something that's definitely changed my life. And the thing, like you kind of mentioned a little bit earlier with like risk management, can you describe a little bit of your, is there any kind of like pointers that you would give out to people as far as kind of like how to, we talked about knowing when to stop out. Like, is there anything that you do maybe on a percentage basis or anything like that? Or is there anything that you, just say like, I'm just going to cut it here and, anything?
Yeah, for me, it's a dollar amount where, I talk about day maker, day loser all the time. And that's the dollar amount that I've determined where, this is my goal to make every single day. I know I'm not going to make it every single day. I'm going to have red days, but my goal is to make this every single day. And if I do, then I have everything that I want. I have financial freedom essentially.
Yeah.
So I also have that same level of a stop loss. If I lose this much on the day, I'm done, because I know from my poker experience, back in the poker days, I know what going on tilt is like, where I lose, I get a bad beat where I have the better hand and I lose. And now I just start throwing away chips. And next thing you know, I'm out of the tournament after being in a really good spot. And a half hour later, I'm out of the tournament because I didn't control my emotional reaction. And so if I have that hard stop where if I lose this amount on the day, I'm done, then I prevent from that, negative feedback loop where next thing I know, I just gave back a month worth of profits in one day. And if we allow that big of a setback, then again, in terms of consistency and constant improvement, it's going to be a really steep hill to climb if we allow for that kind of drawdown. So just cutting those losers, I also give the analogy, it's like basketball. If you've got momentum and you're winning, keep it going. Don't change a thing. You stay in your routine, keep that going. But if you start in the opposite direction, you've got some bear momentum and you lose a couple trades in a row, call the timeout like a coach in basketball. The other team, gets an 8-0 run and they've got the momentum and they're running down the court. You call the timeout, you break that momentum, and you try and settle things down. And so I do that with my trading as well, where I will take a step away and have the discipline to not have losses compound on themselves.
Yeah. And right now, especially in this environment where we got so much chop too, I've been telling my members like, hey, like, I'd love to tell you like, hey, let's get into this, let's get into that. But, I'm not in the business of losing money. I don't like losing money. And unless I see something that's screaming at me, buy me or short me, sorry, you guys have fun with that. Let the market makers do their thing. Let them spin it around. Let them have, spin the amateurs around and get the pikers on board. But that's not for me. And, I've had times where I've been in a stock or an asset and it starts going against me, but it's not going against me a lot. And then it starts to the trade just changes, right? Every day we get new information, and I'm looking at it, I'm like, you know what? I'm just going to cut it. Even though I might be up 1%, I might be down 3%, but I'm just going to cut it because I no longer understand it. And I don't want to trade something I don't understand. And it's defeated the purpose of the trade.
Yeah, that's a key aspect where, it's part of our battle with our ego as traders. We have to look our ego dead in the face and say, I don't know. I do not know what's about to happen in price. And because I don't know, I don't have an edge. So I'm not going to put my money at risk. I'm going to put my money at risk when I have an advantage, when I have an edge, and when I have confidence.
Unfair advantage. Yeah. That's how I look at it. Yeah.
If we don't have that edge, we have to, like right now, Bitcoin, the last month is choppy sideways. Like, I don't know. I know volatility is coming. I know we're about to spike in volatility. I don't know if it's going to be up or down. And so, you can position yourself to potentially benefit if you got, enter in the chop and put your stop at one of the more extreme levels. But other than that, I have to wait for the break in order to have that clarity. And again, we have to be able to admit that to ourselves. And if we don't, we're going to be kidding ourselves often and, lying to ourselves.
Exactly. Yeah. So let's talk about Bitcoin really quick. So I know everybody wants to hear. So I know we've been sideways here, but is there anything? So what I see here on the, kind of like on a weekly basis, it looks like a big bear base to me. Now, for me, it's every day I'm doing my analysis on it, and I tell you, it's nothing really has happened. It's been range bound. I think we're probably going to at least dip to that 12,000 area. And then I think we can get a pretty significant bid off of that. But I was wondering your thoughts there on the matter.
Yeah, I'll pull up my chart here real quick. So for me, I'm watching this weekly time frame and I look at the Bitcoin chart and I agree with you that, there's not really anything to be bullish about at this point, in the sense that we just keep forming these lower highs. This red line that I got up is EMA 12 resistance. And my simple statement is, if we can't get over that EMA 12, the bulls aren't going anywhere. And so they have been unable to do so. That being said, I'm also starting to develop a slightly bull lean in the broader market as we're looking at the S&P 500 trying to confirm the first daily uptrend. Still hasn't happened yet, but we're attempting to confirm the first daily uptrend in over 2 months. So it's this kind of area where, I look at Bitcoin and I don't necessarily view it as much bullish action going on, but I know that if the broader market confirms this little inverse head and shoulders and gets that uptrend going, then it is possible that Bitcoin, makes a move towards 22, 24,000. So I am open to both sides of things, but the most important factor for me right now is the broader stock market, certainly with the correlation we've been seeing in Bitcoin. And so if SPY, breaks this resistance of 375.45 and then follows through to take out 379.46 into next week, then for me, that's, the first win for the bulls in 2 months. And so I'll be paying attention to that. And I have already started to pay attention to that the last couple of days, but that's really what it's going to boil down to for me. Can we confirm the trend change in the S&P 500 or not? And as I've been saying many times, the dollar is just, I didn't know the dollar was this. I didn't know it was this weak today, but here we are testing daily support.
Take a look at the 2-year. The 2-year is getting a bid today. The 2-year is ripping. Yeah.
What is it? US 2. I know US 10. Yeah.
You can use the 10-year or the bonds are bidding today.
Oh, that's 20-year. Yep.
Yeah, that's a 20-year, but they're getting a bid for the first time in a while here.
Interesting.
But now the thing is, though, they've gotten bounces before. Can they, actually follow through and like you said, change trend?
Yeah, that's what it boils down to. TLT has been getting absolutely smashed, and
it's been a disgrace.
we want to be as simple, like you said, as simple as possible. So I look at this and say, okay, every single bounce that we've had in the last 2 months has rejected from daily EMA 12. So it's very simple. If we cannot break daily EMA 12, nothing about this chart changes. So even on this next bounce, I'm just going to be looking for a test of EMA 12. I need a lot of follow through. The bulls are hoping that this is, a temporary climax kind of bottom at some extremes. And again, it's the dollar starting to show me, the dollar gave us the first weekly lower high that we've seen this year. So I'm paying attention to potential dollar weakness and potential, commodity, crypto, and stock market strength. It's done enough here to get my attention. And now with this break of 111.77, there's not much follow through behind it, but that's another little point for the bears, which dollar bears have not had any points
yeah.
in their favor in a long time. And we're just starting to get the first couple signs of that. So that's what I'm going to be keeping an eye on over into next week. Those main things. Can the S&P 500 confirm an uptrend? Can it break a couple of resistance levels? Can the dollar start to show us some signs of weakness? And we're just starting to see the start of it.
Yeah. And I think I was looking at this last night. That inverse head and shoulders you're talking about on the spiders, I believe that target that I did on it would take you up to about 390, which was like the last like major breakdown area back in early September. So it's funny how these things kind of work out, right? Like it's these chart. That's why I love charts. They just, you know, you get a target on one pattern and it lines up perfectly to an exact area of resistance that it just should line up to.
Yeah, they just make sense.
Yeah,
when you put in enough time, when you start, they don't make any sense. And
right.
and trying to figure out how the different time frames relate to each other and trends, and it's extremely overwhelming. But once you put in, it's like riding a bike, where once you figure out, I can identify trends and I can identify how these different time frames interact with each other. Once you get that concept down, the markets start to make sense.
Yeah. Another sector I want to ask you about, I definitely want to ask you about the cannabis names. We talked about that earlier, but really quick, any thoughts on the semiconductors right now? And I know you're probably going to say a similar thing that broad market needs to confirm, but I want to point this out because you are one of the only YouTubers out there that I know that one of the first things you talk after you get done talking about SPY and QQQ, you go to the SMH almost immediately. And I also do that. Most people, and I harp on this, my members are probably tired of hearing it, but like, you guys, you need the semis to confirm any bullishness or bearishness. And they're so important. It's just as important as the transports right now. But CMD is one of the only ones who really gets that concept that I see. But yeah, any thoughts there on the SMH or Intel or any of those names there?
Yeah, so I actually did grab along on Intel for my IRA first time yesterday. And let's talk semis first, then we'll go into Intel. But the way that I view the semis is essentially the NASDAQ has been leading down the S&P 500. I mean, let's go back. The bull market, the semis led, the NASDAQ led.
Software led too.
Yep. Yes. And so then we top out and we have this bear market this year. And we have the NASDAQ leading the S&P 500 down, and the semis are leading the NASDAQ down. And we're starting to see, they matter a little bit more. NVIDIA has a pretty large holding in QQQ in terms of its impact. So they do start to matter more. But what I'm watching for is relative strength and weakness. And the way that I gauge that is I can pull up SMH divided by QQQ, and that will show me, okay, the semiconductors have been weaker than the NASDAQ as long as this has been in a downtrend, which has been a long time at this point, easily the last 4 months. And so we are now seeing the last 3 days, the semiconductors are leading the NASDAQ up. Okay, just now it's all about trends. Can we start to shift this bigger picture longer term and start to see semiconductors showing us that relative strength? Because we know that was a key factor in the bull market, and we know it's been a key factor in the bear market. So we want to see signals that it's shifting and that it is changing. And so this is a chart that I'm going to constantly be checking in on for, follow through. We've seen bounces, but we need the trend changes. We need the higher lows and higher highs, just as if this were an individual stock. So that's how I'm viewing this. And my interest in Intel was, number one, my IRA positions, I'm looking longer term. I can't withdraw from my IRA without penalty for 31 years. So I'm thinking long term. So I see this and I see, okay, I got the wrong chart up. INTC.
That's, I was gonna say that looks a little different.
So monthly first oversold conditions ever. Weekly most oversold conditions ever. And it's just a falling knife on all these time frames. And I love playing oversold bounces as a day trader, as a short-term trader.
Yes.
And so I look at this, and the inside bar bull break from yesterday got my attention. Say, okay, I'm establishing a long. If 24.59 breaks, I'll be out. But I'm looking for, ideally, a monthly bounce to get going here. Even if it's just going to form a monthly lower high, this is a good spot for me in terms of risk and reward. And I think back, one of the things with technical analysis, and when you're putting in a lot of time looking at charts, you look at thousands and thousands of charts, you get this memory bank of, previous examples. And I think back to the biotech sector 5 months ago, and the biotech sector hit monthly oversold conditions for the first time, and the weekly RSI was crushed at that point. And then we bounced 50% in the sector. And so, I look at that and say, well, it was similar in some regards. And so this is enough for me. I'm not making bull attempts the last 2 months. I've been very picky with my bull attempts. And so I say, okay, this is a good enough spot where I'm confident enough to make an attempt. It's a good enough risk to reward, and I'll give it a shot and place my stop and let it play out.
Yeah, I actually picked up you would call it a bottom fish play on Intel. We got that Pierce of 26 on Friday afternoon, and I couldn't help it. I had to pick some up. But I ended up paper hand selling it for a smaller gains. I kind of saw that we were going to have that decline into CPI, and I was like, I just want to get out of longs, but I couldn't help it at that level. I mean, it was in like a 7.5 retrace from like the 2009 lows. You're into this huge belly of support near 25 bucks. It's like, it's wickedly oversold, monthly, daily, weekly oversold. Like I can't not take it there, So another, funny thing you just mentioned too, you struck a chord when you said like you get this memory bank of stocks. Netflix, I'm probably going to do a special video on this soon, but if you look at a chart of Netflix from the top in 2021 to now, it looks almost exactly like 2011. And I've seen it do this. It's like I've seen it do this before. I've seen it cut 50% before, and it actually ended up recovering and going higher. But that was something that's funny. You do get that kind of memory, like I think, I don't know where I've seen this before. I've seen this stock do this thing, and you kind of just remember it, and you're like, you know what? It gives you that edge. Like you're able to anticipate that next move.
Yeah, it just helps shift the probabilities a little bit. Like if I've seen this before and I can go back and look at how it played out, it can give me a little bit of clarity. And so it's just another little piece of the puzzle, previous historical examples.
Yeah. All right. Yeah. So let's talk about cannabis names. So funny story for me. I averaged into an MJ position for probably a couple months. And this is a story I'll never forget. So that 20% spike we got 2 weeks ago, I stopped out of my MJ long 6 minutes before that news broke.
Oh God, that's the worst. And that's the thing, newer, I don't want to cut you off, but newer traders, they'll see that and then they'll say, I'm never placing a stop loss again. Whereas we have to say that's part of the game. You go all in with pocket ace.
Yeah,
you go all in
I was
with
laughing.
aces,
I was laughing about it.
You're going to lose sometimes with the better hand. Like it's just
a lot of my members. This is how fast it was. Like a lot of my members made money on it because they saw the alert like a couple minutes later, and by that time it was already up to like 560. But I was just like, you got to be like, and it was for the exact reason. I was like, guys, going to the election, they're going to pull some crap about legalization. We're going to do this, and it was exactly what I said it was going to do. But I sold because I was like, I don't want to go into CPI with longs. And I can totally live with that decision because in my mind, it was still the right decision. Like if you have 99% odds of something happening, there's that 1% chance that it couldn't happen. But if that 1% happens, are you going to kick yourself for taking the 99%? So for me, that was like, all right, you know what? I'm just going to move out. And then literally it was like 6 minutes later. And I was like, gets halted and everything. I was like, are you serious?
Yeah, laughing is the only thing you can
raise up like 30%. Like
but it's again, as you mentioned, you have the probabilities in your favor, and sometimes the lower probabilities play out, and it's just a part of the game.
Yeah. But yeah, I want to quick get your thoughts on any movement or anything you see in the charts there for the MSOS or MJ or any of those names, anything that catches your eye, or the psych names. I know you talked a little bit about those too.
Yeah, the psychedelic names have been a lot more beat up than US cannabis recently. So I've shifted my focus to being primarily US cannabis. And as you mentioned, it is the votes that have me interested. CNBC starts talking about it.
Yeah,
and
of course.
So that's going to continue as we head into these individual states. Some are going to pass recreational, some are going to pass medical. So there is that little, dangling carrot, so to speak. But with this current MSOS setup, we have a huge range. And after you see this kind of volatility, you scout what I call equilibriums, which is just tightening ranges. So if we don't get any more news in the short term, I'm scouting a lower high compared to 1313. Then I'm going to scout a higher low compared to 940 and just look for this tightening range to continue to tighten up. And in an ideal world, it tightens up and then gets a bull break right into that, voting event essentially.
Yeah. And the last time in 2020, I made a good chunk of change trading those names into the election. And if I remember correctly, they started to run right on, it was like it was either a day before or right the day on of election day. So it'd be kind of interesting to see how that plays out
Yeah, that
this
was
time.
that was a big factor.
It was
It's going to
November
be
3rd.
interesting. It's going to be interesting because it was that had a lot to do with, okay, Democrats are getting the Senate and the House and the
Yeah.
presidency. So it'll be interesting this time, if something changes, if the Republicans regain some control, and whether that's going to be seen as a negative or not. But
Yeah.
I do like the possibility, and we see, it's thinly traded. But if you look at MSOS divided by SPY, it again just shows us, okay, we've had relative strength
Yeah.
against the broader market for 4 days in a row. And I look back at this chart, when's the last time that happened? Well, okay, it happened back here in August, and it's been very short-lived because for the most part, we've
Yeah.
been way weaker than the S&P 500
It's a
forever.
heartbreaker. Yeah.
Yeah. So the key for me is, can we break the highs where we came from? Can we see a higher high after that, pump and dump? And we're going to get that answer probably within the next month or so.
I would think
and
so.
for me, if we're talking longer term, if we break that high, then that for me is a big vote of confidence to be looking for at least, a temporary bottom to be in for one of the more meaningful bounces we've seen in the sector over the last 18 months or so. So that's definitely a focus of mine. And again, we've got that potential news catalyst hanging out, and I'm going to be watching for that.
Yeah. And another thing too, with the news, like this sector is heavily shorted. So even if you do get, like, let's say a red wave with the election, you might see short covering, like just like when you have heavy hedge buying, the VIX is elevated into the CPI number, the CPI number is crap, and the stock, market rallies anyway. You could have that. There's also, you look at it, if you're a hedge fund, you're managing risk, you're heavily short these names. Do you, even if there's only a 5% chance of a blue wave, do you want to get caught with your pants down? So there's reason, there's incentive I could see for covering to take place. But again, it's all about, can we make a higher high? Can we take out and confirm it?
Yeah, fast hard moves are great, but they have to follow through if those gains are going to stick around. Otherwise, they're just going to fade back.
Yeah, absolutely. So let's shift gears a little bit. So obviously it's been an insanely volatile year, which is great for traders. I mean, would you say this is kind of like a golden age for trading, but for professionals only? I mean, like I said this at the beginning of the year, it's like, guys, this year it's going to be tough. Cowboys are going to get shot, and the pros are going to make a ton of money, but you got to be pros. Like, you can't be careful. Buy and hold's not going to work. Do you think that's going to kind of continue here as there's more global uncertainty? The financial system's very fragile, the Fed and so on.
Probably going to continue for a while. And yeah, that's a good distinction to make where, trading definitely is outweighing buy and hold recently in terms of opportunity. But it's, there's a lot of chop out there and there's a lot of back and forth, and it definitely requires, I mean, even me, I've scaled back my trading this year intentionally, saying, okay, it's been a golden run the last 5 years for me. And the last thing that I'm going to do is try and trade as I have been in the last 5 years and apply it to this changing market environment. Because, the changing market environment for me means just pump the brakes and do some more observing and use some smaller position sizes. And so that's been my game plan for this year. And I think it's been a good decision because it has required, I'm observing new things. I'm observing, okay, a relatively stronger sector then turns into a laggard bear. And I've never really seen something like that play out as many times as it has this year. So I'm learning as well. I haven't really sat through a clear bear market in the last, 8 years of trading. And so I have to, I'm learning during this market environment as well. Still 12 years into my trading, and always learning.
I've told my members that the closest thing I've seen to this, and it's not even close, is really like 2010, 2011. But even that, well, I mean, it was volatile, but this is, on another level. And what you're saying, like changing market environment, how many bond fund managers are getting like upended right now because they thought they correctly predicted risk off, but their bonds are just getting destroyed. And everything we thought about risk off is just getting annihilated right now.
Same thing with metals. Everybody that was right about inflation is losing
Yeah.
money on
Yeah.
metals.
Yep. So, and that's other thing too. Like I've been scaling into positions a lot more often. A lot of the usually, I mean, I've always been kind of nebulous with my positioning. So sometimes I'll do a full position, right off the bat, if it's like a Procter Gamble or something like that. And I did that a lot more in the past, but this year I've been almost always scaling into everything just because, you're wrong. You get blown out for 100-point move in the spiders, or in the SPX.
Yeah,
And,
that was
it's that type of environment now.
that was a big upper for my game in terms of scaling in and out. I conceded to my ego. You're not going to nail tops and bottoms. You
Yeah.
should not expect to nail tops and bottoms. And so scaling in and out allows for a lot more maneuverability.
Yeah, for sure. All right. Yeah. So, yeah, lastly, let's just kind of wrap up. So let's go over kind of current thoughts. And we kind of did a little bit earlier on just the current state of like futures and spiders, so on and so forth. Again, we're seeing bonds get a little bit of a bid today. Dollar is getting hit pretty hard. So that's giving market a lift. But, we got $1.8 trillion in premium expiring today. And I kind of said really all week, I was like, guys, they're probably going to close this thing right at 3,700 because that seems to be max pain. Is that kind of what you're looking at here, or is just kind of like an OPEX chop all week long, and then next week we'll kind of find out what the real move is going to be here?
Next week is definitely, I mean, we don't have many hours left this week. So
Yeah.
it's as I mentioned, the daily uptrend. Can we confirm the first higher low and higher high in 2 months? And we're going to get that answer next week as to whether or not that's going to happen. And I think, I've talked about the dollar being a self-fulfilling prophecy in the sense that I would speculate that more traders are watching the dollar in this moment than ever in history, just because there's more people trading and there's more people talking about it. And if everybody's talking about it, then everybody's watching it. And so I think it's going to be a self-fulfilling prophecy in the sense that, if we start to see dollar weakness, that's going to be a major, signal to a lot of people to start deploying capital that's on the sidelines into equities and commodities and crypto. And so that's going to be key to me from here. And on that chart, weekly EMA 12, I've been talking about EMA 12 multiple times in this call. The dollar's been holding weekly EMA 12 the entire year. When it is lost for the first time, we can look at that and say, this is different. Something is shifting in this market environment that has not happened in over 8 months, 10 months. And we're paying attention to that. So watching it very closely.
Yeah. And that's what I've been saying. Is like, look, the dollar, it's overbought, it's parabolic, but you got to respect it. It has no technical damage. It's hanging in there. Okay. We got to respect it for now. And it's amazing. There is, the dollar used to be a dog. Nobody watched the dollar. I remember, I'm old enough to remember, nobody watched the 2-year treasury. Now every day, the 2 years on my, like, it's one of my first things. Cause if I see the 2-year reversing, that's my first canary saying, okay, maybe bonds are telling us the market's going to rally. But yeah, it's totally different environment. Nobody, traders didn't pay attention to the 2-year. I mean, that was like a, the old guys at the bond market looked at that stuff. We're looking at Apple and Netflix, but now everybody's focused in on these, like, kind of like macro indicators, you could almost call them. But
yeah, I mean, I didn't look at a bond chart for my first 8 or 9 years of trading.
Yeah. Every once in a while I would trade TLT, like, oh, this has got a bull flag, but yeah, the dollar, who wants to, the dollar is boring, now the dollar moves like 1% in a day, and it's supposedly the most stable asset in the world, and it's moving 1% up and down in a day.
Different times for sure.
Yeah. All right, great. Well, thanks, Dan, for coming on. It's been awesome here. Where can people find you on social media, YouTube, etc.?
Yeah, so chartguys.com is the website. Look up Chart Guys on Twitter or Instagram or YouTube, and you will find us tons of free content, tons of free intro to technical analysis course and all that stuff. So want to just reach out and let everybody know, come ask questions. That's what we're here for. And I appreciate you having me on, and look forward to sharing your content with our followers as well. And awesome. Nice to make a new trader friend.
Awesome, man. Appreciate you. Yeah. Thank you again for coming on. You guys take care. We'll see you guys all next time.